All right, we are live today, and today we're going to be talking about the $25,000 tip deduction limits. Now, I went over this a little bit yesterday, but today we're going to dive a little deeper because I really want people to understand this tip deduction and when it phases out, because this is like the hottest tax deduction for barbers, hairstylists, beauty professionals, and owners. Okay. So that's what we're going to go over today. I want to make sure you understand. And if you are new here, my name is Jennifer, and I am the founder and CEO of Hair CEO. We are an advisory, bookkeeping, and tax firm helping self employed hair professionals and hair business owners run legitimate, profitable, and bankable businesses. And we do that by managing their business finances. All right. So we have been here a total of 34 days live. We are going strong. We're going to be doing 90 days in this 2026 Tax Talk series. And so today we're talking about this $25,000 tip. All right. So this is um, full motion right now with tax preparation. This tip deduction does count for 2025, but it's important for you to understand that there are limits because the IRS has phase out income amounts. And so I want to show you guys something because, well, let me do this first. So I drew it all out. So this is what we have. All right. So looking at this, you have, I didn't even put, so let me see. So we want to put zero here. So like the tip deduction starts here and then goes like up here. So this is the max, right? So of course, you don't just automatically get 25,000. It's based on how much did you have in tips for the year. So you want to make sure before you start working with your tax professional, if you didn't have bookkeeping throughout the year, you want to go into your books and you want to see how much you got paid in services or products and how much you received in tips. So it could be anywhere from zero or 25,000 for the deduction. So just to give you an example, I was working with a client and they've been a barber for half the year. So they had $6,500 in tips. So while the deduction is up to 25,000, they only had $6,500, 6,500 in tips. So that was the amount that we were able to use for the tax deduction. But let's say that this person had $25,000 worth of tips. Well, we have to make sure that they meet certain guidelines before the deduction actually goes down. So right now it's dollar for dollar, like 25,000. Yes. But they have to make sure they meet these requirements. So the green is for my single. So if you are single or you're filing head of household, then you are at your phase out limit when you hit $150,000. So again, if you're filing single or head of household, the moment you hit 150,000 in your adjusted gross income, then your amount that you can deduct is going to start to go down, and then it goes flat, goes away completely once you hit 400,000. And you might be thinking to yourself, Jennifer, really? I'm now nowhere close to even 150,000. Are people really out here making multiple six figures as a hairstylist and a salon owner? And I will say, yes, they are. And perfect timing because with our clients that we work with at Hair CEO, for our monthly accounting clients, we do something every year where we reward them for when they pass a certain amount, like they hit the six figure club. And so the awards just came in. So I really want to show you guys the award. I mean, my clients haven't even seen it yet because, I mean, it hasn't been mailed. But check this out. So this is so cool. And it's heavy. So this is our six-figure revenue award that we give all of our clients who hit six figures and above. And this is actually for the CEO of a cute salon. They are our clients based out of Fort Worth, Texas, I believe. And they got this award last year too. And they are killing it, killing it. I know I'm off topic, but I got to praise them because they are absolutely killing it. I want to say when they started working with us, they were making about maybe 30 something thousand a month. Now, I already know next year I'm going to have to get a new award because they're going to be the seven-figure club. I already know it. And we talked about it in our roadmap meeting for 2026. So actually this year they should be hitting seven figures. So yes, it's possible. So this thing that I'm showing you right now, very possible. So let me put that down because I don't want that to break because I got to mail that to them. But so it's very possible that, especially them, they could hit this limit. So it's important for us to make sure that we understand that, okay, these are tax deductions, but when do they phase out? Now, if you're married and you're filing jointly, right, you have different limits. So the red line or orange, if you are colorblind or something, the limit, well, the phase out limit starts at 300,000. And so the moment you hit 300,000, then that amount that you're able to take goes down. And there is a formula, but that's not important. What's important is once you hit that amount, you're not going to get the full amount because that's all you really care about, right? Because you want to know, like, hey, I had $25,000 of tips. How come I didn't get my full deduction? Well, you want to look at what was your adjusted gross income. So again, you want to make sure if you're filing jointly, if you're at 300,000 together, right, between you and your spouse, then that number is going to start going down. You're not going to be able to claim that full 25,000. So it's going to start going down, and then it caps out. You can't take it at all once your income hits 550,000. Once you hit 550,000, gone, done. Can't take any of the 200. Can't take any of the 25,000 tip deduction. So that's really important to understand. Now, here's another thing. For my folks who are married and are used to filing jointly, do not say, oh, well, we're just going to file married separately so I can get my $25,000 deduction. Not so fast. That's the exact reason why the IRS actually does not allow you to take any deduction if you file married filing separately, because that's exactly what the IRS is trying to avoid. They're trying to avoid people tricking the system with saying, okay, well, we're going to file separately this year because then I can get this credit. And so they say, oh, you want to file married filing separately? Then you don't get anything. So that's not the move. You want to make sure you're talking to your tax professional because that's not, I don't want you to default to thinking, oh, I know me and my husband or me and my wife together, we're way over this 550. Like I'm just going to file separately. No, be careful. Or you might be like, well, I know at least we're at 300,000. Okay, well, let's figure out how much over this 300,000, because I want you to be prepared to not have this full 25,000, because I don't want you being mad at the tax professional. And certainly I don't want you being mad at me and my team at Hair CEO. We got Tara in the comments. So if you have any questions, you can drop them in the comments, but don't get mad at us if we're like, hey, you made a lot of money. You can't take this full deduction. We're gonna send you straight to this video so you can understand why you cannot take the full 25,000 in tip deduction. So I hope that helps. Let me see. I wanted to make sure that I don't leave anything out from a tax professional. Please seek advice. Yes, please seek advice from a tax professional. I am a licensed tax professional. Tara on the chat is a licensed tax professional, but we are not your licensed tax professionals unless, of course, you have already reserved your spot. to work with us for the 2026 filing season, then we are. And then you want to make sure that you're talking to us directly about your unique situation. But if you're listening to this and we're not your tax professionals, you have not hired your CEO to work on your taxes, then you want to make sure that you are working directly with your accountant to make sure that you are taking this deduction appropriately and under the right rules. And, just you don't want to get yourself into any trouble because you're trying to take a deduction that you don't qualify for. So you want to make sure that you're working with a tax professional. But I do want to invite you, if you are in the hair profession, if you are self-employed, or let's say you are a W-2 stylist or barber, I want to invite you to work with us this filing season. We're working with a limited number of folks this season. Even if you own your hair salon or a barber shop, I want to invite you to click the link in the description. It will allow you to reserve your spot. Like I mentioned, we're only working with a limited number of clients this season. So you want to make sure that you book that sooner than later. And we would love to help you with your taxes for 2025, making sure that you get all of these tax deductions that are in this one big, beautiful bill for 2025. And another thing, just to note, this tax deduction is not forever. This is not a permanent tax deduction. This is going to sunset. It's going to expire in 4 years. So we have 4 years to take advantage of this humongous tax saving. So so I'm excited. I would love for you to reach out. If you're watching this on the replay, if you have any questions, leave a comment, type hashtag replay. Let me know that you saw it. And let me know if you have any questions. But of course, the best way to get answers to your unique, specific situation is to schedule, to book your or reserve your spot for us to help you with your 2025 taxes for the 2026 filing season. All right. So I'm Jen, and this wraps up day 34 for us. And I will see you tomorrow. I don't know offhand what the topic is, but I've already scheduled out all of the topics for the remainder of February. So if there are topics that you want to make sure that you are here for, make sure you sign up, subscribe, hit the alert so you get notifications. All right. I'll see you tomorrow.